I have wasted hundreds of hours and lost money in the process trying to find that golden nugget of what strategy was going to make me profitable. I was drawn to the complex strategies in hope that the more complex it is, the better results I'd yield, just to find out that that was not the case. I've been able to generate my best results with this simple strategy and be able to do it publicly live on YouTube for free, showing my entry and exit over the past almost 2 years now. This has proven to me that I have found my edge and I'm very comfortable with this, yielding me a 75% win rate, all done in public. So in today's video, instead of only explaining how the strategy works, I'm going to go into live examples. I'm going to go and comment on live trades that I've taken to show you how the strategy works in action. So I hope that this video is going to help. I'm excited for it. Let's get it, and hopefully this will be useful. Let's go. So like I said in the introduction of the video, we are going to go through some live examples trying to explain the strategy. But the first thing is I need to explain how it works so that when we're going through the examples, you actually know what's going on. So the first step we're going to start with is actually how this strategy is going to work. This strategy is going to be broken down into basically 4 steps. Now, the first step of my strategy is actually going to be when you come to a naked chart, you need to know what you're looking for. I trade using price action. Price action is my strategy and simplicity is key. I trade price action using a very logical based method here. You want to follow a process that repeats itself on the chart often so that you can capitalize off that, and that is your move regardless of what happens around that. And that's all going to start from me using horizontal lines, right? The reason I use horizontal lines is because they're not subjective. What do I mean by that? Someone cannot argue with me that this is not where a resistance was formed, because this is where price closed bullish, next one closing bearish creates a resistance. But you can't argue that with me. Whereas if someone uses, let's say, a trend line, there is argument to be made that this trend line is better than that trend line. The ones using the wick is better than that, and it can be subjective. So I want to remove subjectiveness from my trading. So the first step I do is I actually mark my higher time frames here, marking my supports and resistances from the daily time frame, which is the markup, which starts from the daily time frame. In this instance, we're going to use something to mark up. Remember, this strategy can work on any single pair. Right now I'm on gold. Since gold is at all-time high, we don't have too much to mark up towards the upside. So let's go take a pair that's not at all-time high, something like GBP JPY, right? You can literally mark up whatever you want to trade, and I'm going to explain more about that in this video. So if we start off on daily time frame, all we have to do is mark our support and resistances. So if we check GJ here, we can see that our support is going to be down here. This is our daily support. What is a support? It is a bearish candle followed by a bullish candle creates a support. I'm just going to mark that as DS, and I'm going to go down all the time frames marking the most recent support and resistance, and this is going to give me my roadmap. It's going to show me the path of least resistance, because wherever there's a line, there's going to be difficulty trading at that zone. And that's how it works. So I do this, I work backwards from daily, I go to 4 hour, and I'm only marking most recent. I don't care about old levels, I'm only looking at most recent. So for daily, this was the most recent support. I don't care about a support back here, I'm looking at most recent. For 4 hour, I'm looking at most recent. So most recent is going to be this one, and then below that one is going to be this one down here, right? So these are my 2 4-hour supports here, right? So I'm going to put that 4S, I'm going to put this one 4S, and then this is going to be my 4-hour resistance. So I'm going to mark that 4R, right? So all I'm doing is marking the most resistance, most relevant support and resistance. How do I define that this was a resistance? Because we have a bullish candle followed by a bearish. If 2 candles are closing bearish, it's going to be more confirmation. And I literally do this all the way down till the 15-minute time frame, right? So we can go mark this together quickly and we can do it. So next one's going to be 1 hour. Right, so where's our 1 hour resistance and support? So now it starts to get a little bit messy here, but essentially bearish candle followed by bullish. This counts as a support, most recent. This is going to be my 1 hour support, right? Now we can go down to the, where's our resistance? We'll check this out. The 1 hour resistance is the same as the 4 hour. And that's nice, right? That's probably why it rejected there, right? Because it was the 4 hour. Now let's go to the 30-minute here. Where's our 30-minute support and resistance? Here's a 30-minute support here. So I'll mark this. Now I don't need to mark this. Why am I not going to mark this? Because this is just from experience point of view. This is not a tradable zone for me. What do I mean by that? It's not a zone I'm looking to take a trade. The video is going to make sense once I explain where you're going to be able to take trades. But when a zone is small, it doesn't make sense to trade. So I don't need to start clouding my chart with hundreds of lines, right? So I don't really need that, right? But I do want this because maybe from here down to here is a tradable zone, right? This from here down to here can be a tradable zone. And this is why it's important just to mark a 30 and a 15, because the 15-minute support is down here, but the 30-minute is higher. So you might take a trade you might be in profit, you hold, it rejects this and you're aiming for this, and that small detail ends up you getting stopped out or your trade reversing and you don't know why. That's why it's super important to go down the time frames here. Okay, so once you have these lines on the chart, it's simple as that. I'd recommend like keep it to the least amount of lines as possible. The next thing we need to know is, okay, what direction are we looking for a trade here? So that's the next step, is looking for what direction are we going to look for a trade. And the simplest thing you're going to do is you're only going to execute on this when the previous daily is closing the same as the previous 4 hours. So you want previous daily closing whatever it is. So it could be bullish or bearish. In this case, we have bearish, and previous 4 hour is closing bearish. So this is the exact type of scenario you want to be looking for a trade, is in this type of scenario where you have previous daily and previous 4 hour closing that the same direction. Could be bullish, could be bearish, but you want that. Now, what do I mean by previous? Well, previous means the candle that closed before we start trading. So that brings me on to my next step, is when can we start trading? We can start trading in these windows. We have two windows, main windows, and we can put a third one here, possibility. The main window here is going to be London, right? This is what I'd recommend, and NY. No, so NY starts really from 8 a.m. Eastern. London starts from, you would say, about 7 a.m. GMT, right? So which is London time, 7 a.m. in London, right? Now these are your windows. You want to be trading in high volume time here, right? You don't want to be trading in random times between session. Now Asian can work. Asian can work, but I want you to focus on London and NY. It can work in Asian, but you'll find more inconsistencies because of lack of volume sometimes. But throughout the year, there is periods where Asian does definitely push. But London and NY is going to be extremely important. So the first thing you're going to do is you're going to look at, okay, fine. Now I understand, when I'm taking a trade. So that previous candle is going to be closing the candle before your session. So if you're trading London, the previous candle before London is going to be that previous 4 hour. Just like this is the previous candle before NY right now. We're about to have NY session. The previous candle is going to close bearish. It has closed bearish. So I know for NY today, I'm only looking for sells in NY. That's going to be the plan. And that's how the rule is going to work. So when you have previous daily and previous 4 hour closing bearish, for that session, you're only looking for sells. If you have previous daily and previous 4 hour closing bullish, for that session, you're only looking for buys. And it's as simple as that. That's how you're going to define which direction you're looking for. But there needs to be an analysis that needs to be done. You need to start from the daily and make sure that it does make sense for sells, right? That you're not selling at daily supports and stuff. There is a few details that need to go in this. It can't be easy as ABC. Although I'm giving you the blueprint here, there are details that are going to matter, right? So just use some common sense. Check what market structure is doing. Do we have a downwards market structure with the 4 hour bias? 4 hour and daily closing bearish is going to support your idea. Do we have downward market structure? Yeah, we do. So this is supporting my plan. Okay. Check that on 4 hour, right? Those are the time frames you really want to see trend. 4 hour and daily are the best time frames to see trend. 15-minute is where you're going to get confused because you might see this as an uptrend when higher time frame, guys, remember all of the story comes from higher time frame. Higher time frame tells everything. So focus on higher time frames. Lower time frames only used to find trading zones and entries. So that takes me to my next step. How are we going to find a trading zone? Trading zones are simple. I'm looking to trade in zones where there's candles are clean, where there's not support and resistance. I do not want to be taking trades in zones like this, which is why in the beginning I didn't mark it up. In zones like this, I do not want to be taking trades. I want to be taking trades in these zones. Why? Because in the past it was able to move clean. I can expect a clean move in the future here. Right? So for sells today, where would be a selling zone? Remember we discussed that there's the option for sells to make sense. So today a selling zone could be this because this was a clean candle. You see that? There's no support or resistance until we reach the 30-minute, which we marked up in the beginning. Below that, it's pretty messy. There's no real clean zones. These are too small to be able to trade. So I'm not interested in there. Realistically, today I have one zone to capitalize off, and that's that zone there only. Until if we can get below, yes, we can start to argue this zone, but there's a 4 hour support sitting right here. Probably not going to be your best idea to do so, right? So those are the zones you want to look for a trade, okay? You want to be looking to execute in these type of zones, right? So which are clean candles because this is a path of least resistance. It's going to be very, very important. So what do we need for our entry confirmation? So entries are going to be taken on the 15-minute time frame. And what you're going to need is you're going to need some form of range to form. Now, what do we define a range? A range is defined by a what? a support and a resistance formed. Okay, so I'm going to draw this out for you. Essentially what we want to have is, let's say today, we discussed we're looking for sells, right? So the range needs to look like this. We need to have a support formed and a resistance formed. That's going to create a range. Okay, so how is a support formed? It's when a bearish candle followed by a bullish candle, and then a resistance is formed by when a bullish candle is followed by a bearish, right? So it will essentially form a range, and I'm going to get a drawing up at the end for you guys so you can see, but it's going to form something like this. Okay, it could be bigger range, it could only be 2 structural points, but the rule is we want 2 structural points, right? 2 structural points is going to be important. Okay, that is going to create a support. So remember, today we're looking for sells, but that is going to create a support right here, right? And you're going to mark that support, and this is all referring on a 15-minute time frame. What we're going to look for in this scenario is we're going to look for a candle to close below that support. Where? In that clean zone that we're looking to trade. Remember, we said we want to trade in a clean zone. So we want to trade in a clean zone. Why do we want to trade in a clean zone? Because it's a path of least resistance. So when we have a clean zone, we want a bearish candle closing in that zone, because today, remember, we're looking for sells. So we want a bearish candle close in that zone, and this will be the trigger for our sells, right? And this is going to be done on a 15-minute. Now, it can work on a 30 and a 1 hour. Don't get me wrong. You can take that, but 15-minute happens more often, so I enjoy that more. So we want a bearish candle in that zone, closing, and we'll be able to take a position here, breaking the low with stop loss above the candle high that closed below. Above the candle high that closed below, and this is known as setup 1, right? And you saw from the sheet, we can just go back. This has my highest amount of trades taken was using this setup here. And it's as simple as that, right? That's exactly what we want. And where are we going to target? Because this is what no one explains to you, is where to target. We're going to target the next support and resistance. That's it. Okay? This is a stupid massive zone. First try to get to 1-to-1. I would say secure something and then try to leave a runner. But ideally, you normally 89% of the time, I don't know why I chose 89, but 90% of the time, you're going to have a zone sitting here, something like this. And that's going to be your target, right? So make sure to choose the most recent zone. Don't choose a zone, the max zone. No, choose the most recent. So if we go ahead and look at that, compared to what's happening on the charts right now, we can see, let's say if I'm looking for sells below here, right, below my 1 hour support, my next zone is going to be the 30-minute. That is the next line I have on the chart. That's the whole reason we mark our lines. So that's my target. Past that is a question mark. We don't know. Trend can continue it, but it's not our job. It's not our job to try predict how far it can go. Our job is to get from point A to point B. Okay, and that's how the setup is going to work. This might seem a little bit confusing because of the information dump I've given you, but this is why in this video I want to move directly into showing you live examples and talking you through the live examples so you can see this in action instead of me just explaining it. So it's going to be cleared up a bit, but that is the overall concept. So let's go straight into these live examples now and let me show you some of that. So here's an example I recently took. This is going to be a setup 1. So as we can see here, there's a resistance here formed on price. So we're going to be looking for that close above resistance. Towards the left here, we have our clean zone. Bias, we're looking for price to continue up today. And we have our markup. You can see our orange lines being marked up here. So we're looking for a close above, and that's going to be the entry trigger here. So let's see how that goes. And that is going to be the plan behind today. So you're going to see all of that play out there. So I'm going to commentate through the trade. So here we're making a bottom wick on this candle. This is where I'm looking to execute a trade here. So once we broke the high here, we can see the move we get. So immediately broke the high, got triggered here, and boom, we're pushing nice already. Pushing nice already. A strong push towards the upside. You can see this moving clean. My target is going to be a 1-to-1 because the next resistance is so far away, like I said, that I want to target a 1-to-1. At this time, I left my stop loss at break even here, as it didn't make sense to lose this trade after such a big push like this. And what that means is basically bringing your stop loss to your entry. So took this trade here. This is a good example of showing the trade here. So we're gonna go into our next example here. This netted me about 1.1%. So here's another iteration of this same idea. We can see we have a resistance formed and a support formed, creating us that range. Now I'm looking for the candle to break the high. Stop loss will go below the low. Towards the left here, we have clean candle here. I'm watching this resistance here, but my next real target is that previous 4-hour support. And again, same plan, entry, breaking the candle wick here, stop loss below the low. So going to skip through some of this trade here. So as you can see here, reach that first resistance. You see the resistance here to the left. Very important to note that. That should be our target. So what do I do at that resistance? I put stop loss to break even. Why? Because we hit our first target here. And eventually, as you can see, eventually made its way towards that take profit zone. Okay, that was the trade there. Targeting 1-to-1 most of the time going to be most accurate for me, but that was the plan. So that is some real life examples. I hope that made a lot of sense. What I'm going to do is I'm actually going to link you. So what I'm going to do is I'm actually going to link a free PDF in the description below that is going to link you to my Discord. You can use that PDF, and there's going to be a picture of the actual setup one diagram for you to use and have. So you're going to have that setup one diagram that you guys can use. But I hope you guys enjoyed this video. Definitely been a game changer for me. It's not going to be a plug and play. You know, you need to do some experimenting, backtest on it, use a backtesting software and get good at this. But it definitely is going to give you a good guideline and a big, you know, a step up in terms of clarity, not needing to overcomplicate and go through bullshit. So I hope this video has helped. Take care, trade sharp, and hopefully catch you guys very, very soon. Peace.